Alright, YouTube. I'm not gonna lie, man. I think I'm done with the holding back the game, man. We not holding back anything else, bro. Honestly, you come across my YouTube channel, you like my content, you like my trades, bro. I'm just not holding it back. So, um, if you're my student, man, you just you pay difference for working with me directly 1-on-1. But honestly, I just feel like this information is out there and it's just for so many people to go ahead and get. So without furthermore, man, I'm just gonna go ahead and show you guys this trading strategy that works every single day that you guys can literally apply every day to make some money. If you simply can have the opportunity to be patient, disciplined, and be consistent with those two things, you're going to make money every day. And if you can go ahead and be disciplined to have a 1 or 2 risk management properly every single day, you guys are going to make money with this strategy. So without further more, I'm just going to show you guys my thought process, how I think, what I'm doing to get into these markets. I do have private mentorship. I do call my trades live every single day on Twitch at 9:25 a.m. Eastern, Monday through Friday. We are live every single day. So without further more, let's go ahead and dive into this. I just want to give you guys this little insight on today's trade. Today is September 3rd, 2026. I'm going to give you guys some insight. Hopefully you guys are able, if you have any feedback, go ahead and comment down below in the comment section. Let me know what you guys think, if this makes sense for you, if the way how I'm breaking it down makes sense for you, if the way how I'm portraying this trade makes sense for you. Let me know. I'm definitely curious because I know for a fact there's a lot of you guys, or a lot of people, I'm not shooting any shots, but there's a lot of people that teach this stuff who just make it so overcomplicated. I feel like things are supposed to be systematic and have an ABCD approach, and it's just supposed to make sense. Like if somebody doesn't get into a trade and understand why they're getting into a trade and have confidence behind it, then what's the point? Okay, so what I'm going to show you guys is just going to give you guys some more clarity. So without further more, this is technically an A+ setup for me today. Just simply off of how the price sets up today. What I like to do before I come into the markets, these are the same things that I teach my kids, right? My students. The same things that I teach my students every single day. Okay, this is what I teach them, how I approach the markets, how I get in, how I'm taking my trades, and the psychology behind it. Right now, what I like to do is I trade off of quarter theories, and these quarter theories I base my session breaks off of 7:30, 1:30, and 7:30, right? So 7:30 p.m. is going to be the start of my Asia session, 1:30 a.m. is going to be the end of my Asia but the start of my London session, and then 7:30 is going to be my start of my New York session. Okay, so all I want to do is go ahead and just mark out the highs and lows that are created between these sessions, right? So as you can see, between 7:30 and 1:30, we had, this was the highest point, right, around this 23,307 level, and then this was our lowest point around that 23,266 level. So those are our two highest points between Asia, the high and the low. So now we know our Asia highs and our Asia lows. So once London session opened up at 1:30, as you guys can see, seeing how price, we didn't run below that Asia low, but what we did was we did start running higher than that Asia high. Okay, so what did price do? We broke that Asia high, we came back retesting and kept pushing up. So now we know that we're creating and printing our highs for London. So between 1:30 and 7:30 a.m., we have these lows here and these lows highs. This is London lows and this is London high. Okay, because these lows were created between 1:30 and 7:30, and these highs was created between 1:30 and 7:30. So after 7:30, when we're now officially into New York session, what I always teach my students is that we're gonna wait until 9:30, where that opening equity bell. And I'm telling you, if y'all don't care if you're a brand new student, if you can follow what I'm showing you step by step, you're gonna make money. Okay, now, and it's like you gotta have the discipline and the understanding to not over leverage. But if you could just risk a little bit and properly do this, you're gonna win more than you lose. And I promise you that. Okay, just by following what I'm showing you, because I'm here to make this simple, right? It's as simple as it can be. The most of trading comes down to psychology. So let's get back to it. So now that I know that the highs and lows, we have the highs and lows of London and Asia, and we're waiting until 9:30 when that opening equity bell opens. Okay, so as you guys can see, we had after 7:30 prices playing around. Then when it comes to 9:30, what do? Price starts spiking down, and eventually we see that price is now pushing up. Now when price is pushing up, we also start to see that these movements that we want to see up, how we make these movements valid is that these movements are, they have a gap in them. So if I see candle have an aggressive move up, that aggressive move up better leave a gap within that candle. So now what I'm going to do is I'm going to start highlighting all the aggressive moves up going towards that high, being that price is already trading towards that London high. So what do we do here as the price is pushing down and start going up? This is the first aggressive gap that we have. And then now what the price do, we didn't really do anything before price pushed up again, leaving us another aggressive gap. But now what's special between this aggressive gap, which we call fair value gaps, is that this fair value gap is actually formed on the 15-minute as well. So if we have a gap here on the 15-minute, the higher the confirmation, the higher time frame, the better the confirmation. So the 15 and the 5-minute, we both have gaps on both, which is just giving me even more confirmation, giving me more confluence. And all I'm simply doing is now noticing that price not only took the London highs, we also took the London highs yesterday and the Asia highs from the day before. And what did we do? We took that with such an aggressive move, which made us identify that candle to make us, now when we identify that candle, we want to see it leave a gap behind. So once it leaves that gap behind, we therefore want to see price close below that gap, sometimes retest. Okay, so now when we come and go close below this gap, I see that now the 15 minutes is pushing down. We have the 15-minute gap, and then you have these 5-minute candles pushing below. Even if I go to my 3-minute, I can see that the 3-minute candle is already pushing down and retesting and going even lower. Okay, and now this is where I'll be looking to get into my entry, risking 50 pips and looking to target 100. Okay, 1 to 2, 50 to 50, TP1 to 50, TP2 is 100. Okay, simple 1 to 2, risking 50 points. And I don't even have to risk the full 50 points. I could have risked 26, 25 points today, and it still would have been good if I didn't want price to go back above this gap. But just giving myself that extra room, just giving myself that same strategy we always trade with, following the same risk plan that we always trade with, getting with the same lot size, the same amount of contracts that we always trade with, allow me to go ahead and take this trade without having to overthink it. Okay, because now when I overthink it and when you over leverage, you can't sit through the motions of price going down or work because you're so on edge. And that's the difference between a good trader and somebody who's actually just out here just gambling. Okay, so I hope this video made you guys get a little bit more insight. It's not going to be long at all. I just really wanted to come on here and just give you guys the picture behind how to take this trade and how to find an entry model that's going to help you make money. This entry model will help you make money. If you guys can if you guys can draw a couple of lines and understand the importance behind these lines, because obviously in my mentorship, we go deeper into quarter theories. We go deeper into all these true openings. We do go deeper into obviously these inversions and all these other things. But I'm just simply showing you guys, if you guys are struggling right now, you understand the markets, give this a try. Give this a try. If you want to work with me directly and we can work with it and I'll show you exactly how I do it, then, you know what I mean? But it doesn't get any more clearer than this. All right, I want you guys to understand. Find your ranges, right? Session ranges. Asia, London, New York. Okay, identify your highs and your lows of Asia. Identify your highs and lows of London and New York. Wait until 9:30. Open in equity bills. Simply wait for that. You can wait for the silver bullet, whatever you want to call it, 950 candle, whatever you want to call it. Simply just wait till after 9:30. After 9:30, we're going to simply wait for price to either take out these highs or take out these lows. Whichever one gets taken out first, we're going the opposite. So if price takes out the highs after 9:30s, we're most likely looking to go shorts. If price looks to take out the lows, we're looking to go long. Okay. After 9:30 here, we marked out the highs. We marked out our lows. We marked out our highs. We marked out our lows. We wait till 9:30. We wait till price go ahead and push up aggressively, take out these highs, even more highs over here. Not only when it took out those highs, it left us some gaps behind. And when it left us those gaps behind, we were able to go ahead and react based off of the candles closing how we want and then giving us our targets, 50 to 100 points. And I want you guys to understand there's even more behind it, 50 to 100 points and leave a runner. Okay, so I want you guys to understand that it don't matter if you're experienced, new, struggling trader. If you guys can simply follow this, you guys will make money. I'm not saying this is the end all be all strategy out there. I'm just showing you guys a way of having systems. Money is made in systems, okay? If you can have an A, B, C, D system, you're already winning a trade. I want you guys to understand with this A, B, C, D system, it's like you're profiting in the D stage, in the C, D stage. You get what I'm trying to say? A and B has to happen. Sometimes A, B, C has to happen for you to go ahead and make money with D. You get what I'm trying to say? But sometimes you guys have to understand that money is made in a system, and by me marking up these charts, identifying these highs and lows, I need A, price needs to go ahead and push out and take these either the highs or lows. B, go ahead and inverse the gap, and then C, close below this gap or close above this gap depending on which one was taken first, and then we go ahead and execute on the trade. I'm not looking for no trade if the price never took a high. I'm not looking for no trade if price never developed a gap. I'm not looking for no trade if price never closed below. Okay, so that's what I want you guys to understand is that when we're executing this trade, we're executing these trades from a standpoint that all the other things that I already want to happen happened. You don't become right off of a trade just because you financially make money off of it. There's people who make money in this market every single day with little to no understanding. Okay, so I hope this video give you guys some clarity. If you guys want some more, go ahead and just comment down the feedback. If you guys felt like you learned something from this video, make sure y'all go ahead and just drop a comment before. Make sure y'all like so we can go ahead and end up in the algorithm. Comment, and I will see you guys on more videos. Von Next Door, I will be making more videos. Let's get it, y'all.